Hello guys, how have you been? I hope you guys have been killing the market. Welcome to another video. In this video, I'll show you exactly how we were able to catch all the two major moves that happened from the 29th of April to the 3rd of May, all based on trading facts and institutional data. Without any further ado, let's get it started. Here is the chart of Euro USD at the open of the 29th of April. The first and the most important thing when it comes to trading is direction. We need to know where the market is expected to head before coming to trade. So for direction, we use macroeconomics and institutional accumulation. We get institutional accumulation by counting orders opened by the institutional traders on the days within the previous intra-week contract. We provide this data and other counts in our paid data channel and discussion group. If you are interested and would like to join, I'll leave a link in the description of this video. As you can see from the screenshot, on the 27th of April, which is Saturday before the Monday-Tuesday contract, we posted the institutional order counts, which showed that the big players are bearish. Therefore, we should be looking to sell Euro USD for the Monday-Tuesday intra-week contract period. So let's mark the chart with a red line at the open of that period. So we have the red line which marks that at this point we are expecting a bearish movement. Similarly, on the 1st of May by 7:35 a.m., that is before London open on Wednesday, we posted the institutional orders from Tuesday and did the order count to determine the direction for Wednesday-Friday contract period. The order count ratio was 4 buys to 1 sell, which means the institutions are bullish, so we should buy Euro USD for Wednesday to Friday contract period. With this approach to trading, you have no business looking for direction on the chart. All you just need to do is find the setups that align with that direction and trade. If you want access, like I said before, the link to join is in the description of this video. So let's mark Wednesday open with a blue line to signify the expected bullish direction. Now that we know the direction, we analyze price action for setups in that direction. The first step is to find our location in price based on major EBITDA price. So we have to mark the major EBITDA price above current market price and the next major EBITDA price below current market price. As you can see, the current market price is 1.0707, which means the next major EBITDA price above that level will be 1.0850. That's the next major EBITDA price. Now the next thing to mark is the next major EBITDA price below current market price, and that will be 1.0500. That means we are currently in the middle of the two major EBITDA prices, so we have no sudden reversal or major resistance to be scared of. So the next thing to do is to mark the major times. As you can see, we have our contracts marked. So what I'll just do is to mark the end of this Wednesday to Friday contract, that's on Friday close, and I'll also like to mark the previous intra-week contract before the Monday-Tuesday that we are about to trade. That is the Wednesday to Friday contract right here. Let me make the color black so we don't get confused. Now we have all the major intra-week contracts marked. The daily contracts are also right there, automatically marked by the period separator. So the next thing to do now is to check the price structure within the previous intra-week contract. As you can see right here, the previous intra-week contract was a range, it was accumulative, there was no major trend. That means we had an accumulative Wednesday to Friday contract. Now let's mark the accumulation range. That's the high to the low of that contract. So we have the high to the low. Perfect. That's the accumulation range, and as you can see within the accumulation, we had price broke this area right here. gave us a break of structure to the downside, which means it is an accumulative sell structure. Price is already bearish within the accumulation, and we are also looking to take a sell trade. That means a return to this supply zone right here is what we are looking for. So let me go ahead and mark that supply zone, this area here, where we will be looking to sell. And like you already know, I don't just sell because I have the zone marked up. I'll look at price action and look for liquidity grabs on the way to the zone. If I don't get that, I won't take my trade. And I like to take my entries using the minor EBITDA prices, which means I will be taking my sell trade on the minor EBITDA price inside this supply zone. And as you can see, the beginning of the supply zone is 1.0728, which means the next minor EBITDA price inside that zone is 1.0750. So let me mark that. So that is exact price that I'll expect to take my sell trade from. So let's go ahead and play price and see what price action will look like on the way to the zone. As you can see, price hit that zone already, but at that point we don't have any reversal signals, we don't have any liquidity grab, and also price is yet to hit our next minor EBITDA price. So we just wait and see what happens after. Right now you can see this new ABCD swing to the downside. That is telling us we have a liquidity zone right here. Let's continue. Yeah, price went all the way up again. Now we have another ABCD swing to the downside, as you can see, which makes this area a liquidity pool because we have two ABCD swings right there. That makes it a very, very good zone for sales. So that means if price can run this level, we have a confirmation price action for sell because we already have liquidity pool right here on the buy side, which means to take a sell, the institutions can just run this and use the liquidity right here to pair their sell order, and then we have our sell move. That is what I'll be looking for right now. But you know, like I said before, I expect price to run the liquidity and eat this next minor EBITDA price. That's exactly where I like to take myself from. So let's continue. Price came all the way up, run the liquidity, but price is yet to hit this level. And as you already know, we are in the supply zone that we want to trade already. So if I get a full rejection from this area, it means the institutions no longer want to take price to this minor EBITDA level. So I'll be looking for a retracement entry within this liquidity pool reversal structure. Like you already know from our liquidity video, that whenever you get a liquidity pool reversal pattern or a consecutive liquidity zone reversal pattern, we have the first opportunity at the liquidity run, and then we get a second opportunity at the retest. So if we get a rejection here, that means I'll be using the retracement to enter my sell trade. And also remember, it is a Monday Tuesday contract and we are already on Tuesday. That means there is no time left for price before the delivery of this sell move. So let's continue. Yes, you can see clearly that we've gotten the rejection that we are looking for. Now we have a full confirmed pattern, which is a reversal pattern. Now the sell is confirmed. All that is left is for us to find our entry. Now let's go to the 15 minutes time frame to see what price looks like. So this is the 15 minutes time frame. Now we see what price is looking like. We can now set our Fibonacci tool on price to see when we get a 618 retracement or any retracement above the 50% level is a good place to enter our sell, and our stop loss will be right above the liquidity run. Here we have the 618 retracement, so we have our pending order right there. Let me mark that. So we have our sell entry right here, stop loss above this level, and our target the previous intra-week contract low, and like you already know, I like to target the next minor EBITDA price after the liquidity run, just like I am using it for entry. That's going to be my target for this sell trade. Let's just play price and see how the entry will be. Now we have the entry right here. Price has triggered our pending order at this point. So let's go back to the 1 hour time frame so we can adjust our take profit level. So to get our target, we look at the low of the previous intra-week contract, which we said is an accumulative intra-week contract. Don't forget that. So at the low, the price is 1.0673, which means the next minor EBITDA price to that is 1.0650. So let's mark that 1.0650. That's our target. So this is our first trade for that contract. Now we are already in the trade. The trade is running at this level. So let's play and see how the whole thing plays out. So at this point, we are already running at about 1:2 risk reward ratio. So I have my stop loss moved to break even just to be protected, and because we are getting too close to the end of Monday Tuesday contract, so I am protected, although I already know this is where I expect price to still get to. And at this point, we don't have the order count for the next contract, so we play and let's see what happens. Now price has taken out Wednesday to Friday contracts low, so we have to be very careful, because at that point price may decide to reverse. So at that point, we start moving our stop loss into profits so that we are still protected while we wait for price to hit the target. Now we have entered into the next intra-week contract, and we have done our order count at this point. And now we know this Wednesday to Friday contract is bullish, which means we should be expecting a reversal very soon. So because of that, I'll have to manage this position very closely by moving my stop right to this level. The most recent high here is where I moved my stop loss to, just to be well protected in case the reversal is about to happen. So that is that. We still have our sell trade running. Now we start to do our analysis for the buy trade. What do we do in that situation? We look at price action from the previous contract, just like we did here. From the previous contract, we can see that we had this little accumulation at this beginning, which is a continuation of the accumulation from Wednesday to Friday. That means the Wednesday to Friday accumulation extended into Monday, Tuesday. And at the low of that accumulation, we have liquidity pools. This point, we have liquidity right here. We've taken out the liquidity pool here to go up. Now we have this liquidity, then we have this liquidity, and this one right here. As you can see, the ABCD move, the ABCD to the upside. So we have 3 liquidity zones at this region that needs to be taken out, which can lead to reversal. And just like I said earlier, when I'm looking to enter my trade after liquidity grab, I use the next minor EBITDA price below the liquidity zone. That means at this point 1.067473, the next minor EBITDA price is this level right here, which is 1.065. So the level where I'm looking to take my entry for the buy is the exact level where I'm targeting for my final TP on the sell trade, which means it is a very perfect situation. Now we already have our liquidity grab. I just need price to hit this level and I'll be entering my buy trade. But if price refuses to get to the level and give me reversal pattern before the level, I will still use the retest to enter my trade, just as we did right here. So let's continue moving price forward. At this point, we have set our pending order for buy right on the price while we wait and still observe price action to know if we are going to be getting in on the pending order, or we'll be setting a higher pending order so we don't miss the trade. So let me mark that. We have our pending buy order right here with a 15 pip stop loss, 1.06500, and our target, similar to the previous contract, our target is going to be the run of this liquidity right here, which is the Monday Tuesday contract liquidity, but we are going to use the next EBITDA price after that, which is where we are supposed to have taken our sell initially, but price refused to get to. So that's going to be our target. At that point, we liquidate a lot of the position and just leave very little, maybe 30% to run in case the next intra-week contract is still bullish for continuation of this bullish move. So that is what we are waiting for. So let's see what happens. Price continued. As you can see, the level 1.0650 was hit right here, and immediately price went into profit, giving us about 1-to-1 straight up. At this point, Wednesday is over. We have entered another day, and you can see this sharp move to the downside leaves us with this level right here, and now we are building accumulation inside this range. You can see now the price is coming back down. If we get the liquidity run of this point, it's going to be a very good point to have another buy entry. You can see we got that right there. Price ran this, took out this low. If you go on the 15 minutes time frame, you will see that clearly that that point is a very good liquidity zone. You can see what I'm saying right here. We have this ABCD swing to the upside, a lot of liquidity right here, and price came all the way down, took out this pin right here and also this level. I had my entry on 1.0685 and my stop loss at 1.0665. My take profit was still at the same take profit level as the previous major trade. So let's see what happened. You can see price is already heading in our direction. At this point, price gave us our TP. We got our take profit just before the news came out. At that point, I closed most of the trades and then moved my stop loss to this region just in case the news wants to go down. Most of the time, like 90% of the time, any major news that comes out within an intra-week contract will always spike in the direction of the institutional order count. That has been proven. Members of the channel can testify to this because since January of 2024, all the major news that has come out has delivered perfectly in the direction of the order count from January to this present day in May. So immediately price got to this point, 1.0800. That's where I closed all the trade and I was done for the calendar week. Like I said before, if you are interested in joining our premium channel where we share the institutional data and the order counts for every intra-week contract, I'll leave the link in the description of this video. Let's see what we got in terms of risk reward. For the first trade of Monday Tuesday contract, we had about 1 to 3.67 risk reward ratio on that. For the second one, we got 1 to 6.47 on the first trade, and on the second position we got 1 to 3.3 on the first take profit, and the final TP was about 1 to 5.9. And for the final TP on this first position, it was about 1 to 9.7 risk reward ratio. Very awesome trade, very easy trade to take, very simple analysis, and everything just played out perfectly well. That's going to be it for this video. I'll see you guys on the next one. Have a good day. Don't forget to like the video. If you are yet to subscribe to the channel, hit the subscribe button right now. I'll see you guys on the next video.